Okay guys, welcome to today's video. We're going to be talking about scaling into winning trades. Of course, most of you must know what scaling means. If you do not, I'm just going to briefly explain that, so this video is not going to be too long. Right, so scaling into winning trades, so it simply means that, for example, you've caught a particular market direction on a higher time frame perspective. Say you have market moving in an uptrend like this, and this is a higher time frame uptrend. Then all of a sudden, right, market makes a particular shift, right? You know that the trend line has been taken out. Now say this is higher time frame. Now this is maybe daily time frame or 4 hours time frame, right? You know the trend line has been taken out, and market broke structure and close here, right? And wicks above this other high, took it with a wick, and maybe there is an imbalance, say a 4 hours time frame imbalance, okay? And you waited for market to pull into this imbalance and you caught your trade. You'll be targeting this level of liquidity first for your take profit, right, as a day trader. But you know that with time, especially if the structure has shifted properly, you know that with time market will still, right, make different moves to want to go take out the low right here. So how do you do scaling? This is where scaling comes into. Scaling means holding a particular position or catching um, multiple positions as you go, right? How to scale into it means, how do I even put it? Using different POIs and liquidity level to add to your position safely without what breaking any of your trading rules or any of your risk management rules, right? So it helps you to grow your account faster. Okay. Now, for example, you now caught the trade, right? You took the first trade here, right? What some traders will do is they'll put their entry here. Stop loss will be above this high, and they'll target the lows, right? Is it wrong? No, it is not wrong. Some traders can enter aggressive like this on 4 hours time frame, right? They'll be getting, say, a 1:4 trade, right? They will enter like this on the 4 hour time frame. They'll be getting, say, a 1:4 trade. But you now you want to scale. Now instead of entering one trade, right? So it's just a method for you to maximize your profit. You know that that trade is going to win, but instead of just catching one moves, you want to be very sure to catch multiple moves along the way, the same direction, right? So a long time trader would enter the trade aggressively like this, and he will be successful. Trade will definitely go and hit, right? But we know that most times, especially if this is a higher time frame, the trade will not just um take it out with one candle, because you can see this particular range, and at every level here there is a demand that can act as a pullback. So now you're not fighting against the trend, because you know the trend has been broken and market has shifted. But you're not fighting against the trend, but you know that since there is a pullback, just the way we had, let me put this back here. Since you know that there is a demand on these levels, right? All these demands might be opportunity. If market sweeps them or taps them, it can give you opportunity for a pullback. For example, after this break, market can do something like this, can move up, you understand, tap the entry and take this out, maybe tap into this other demand, makes a pullback, breaks again, tap into this other demand, makes a pullback, breaks again, right? Now someone that entered the trade aggressively from this place has just gotten one entry. Say you're risking $500 for a 1:4 trade, you just one entry, right? But someone that understands that, oh, market does not make just one move, will be able to catch multiple trade opportunity. It means you now scaling, because you know that your first entry has triggered, first TP as triggered, right? You are entering another trade when market makes a valid pullback to the first level. You are scaling into another trade setup, right? Market takes that level out, scaling into another setup, right? But you are always following your rules. It means there must be a valid point of interest, there must be a liquidity hanging there, right? You see that happening multiple times in the market. So instead of just catching one trade, right, when this person hits TP, this person will just be hitting TP for one trade. But you now you'll be hitting TP for one, two, three, if not four trades on the same direction. So your own profit will be definitely higher than this, right? So that's how to scale into winning trades, because you know that market has shifted direction and there's a high probability market will take the previous low. So as market is making those structural move, instead of just looking at the charts and allowing the move to play out, you are catching multiple entries as it goes, right? And I think there is a similar example here on ETH. Remember, we were just taking our trades and closing out, taking our trades and closing out. But if we were to scale, right, when we caught our first entry here, when we caught our first trade entry, I think the first trade entry was around this region, right? We took profit around this demand for the first trade, right? Second trade entry here, took profit around here. Okay, third trade entry. So if you look at all the entry points now, for this is first entry, second entry, third entry, you can see they did not invalidate each other. That tells you that if you were to scale, right, this, you've gotten your first trade entry, you're holding, you've gotten your second trade entry, you're holding, third trade entry, till you know that, oh, market is definitely going to hit a particular point of interest or a particular liquidity regions on higher time frame, and you are scaling. It means as market is making pullbacks, you are getting entries, right? Continuation entries. And that's why it's good to use platforms that give you opportunity for you to enter multiple trade entry, right? I use CoinW exchange. I can have a particular trade entry here and enter here without the trade invalidating each other, right? This one will be running on its own separately on the exchange. This one will also run its own. This one will also run its own. You can also use forex brokers to do that, right? So you can see it. If you had catch another move here, beautiful. This one also was an entry that market used, beautiful to scale, right? So this is how you catch those entries. So it's important that I make a video so that you guys understand how to scale. Scaling is a method that even prevents you from gambling, especially those people who love to enter to over trade, right? Instead of over trading, you can just scale, because you know that market has taken out this higher time frame trend line. We are definitely going to take out this liquidity, but let me understand price action. So now you know the direction. So, and that means any pullback to the upside, it means any pullback to the upside is an opportunity for you to catch a trade. Any pullback is an opportunity for you to catch a trade. Any pullback gives you an opportunity to what? Catch a beautiful trade. So that's how scaling works, and you would need to be very sure. Now, you do not just enter trade, you still use everything you have been taught, right? The same thing you saw while you caught the first trade entry, you must not be in a hurry, right? Do you know why? You might be trapped. For example, let's look at this move, right? You can see if market has a particular point of interest here, and say you caught your first entry, market hits entry to TP, right? Sometimes market can create something like this, which is a good setup, right? But most times this first move can be an inducement, right? Now you catching this move from a particular imbalance, it's a good trade, right? It's a beautiful trade. And of course, from here to this level of liquidity, you have taken profit. Now market can do something like this also. Use this as inducement, tap into the order block and continue moving downwards, right? So while scaling, you must make sure you understand price structure, right? Understand price structure before you go. If not, you take your first entry here, right? And you'll be taking second entry here. Of course, you'll be putting your stop loss above the POIs. So your stop loss, the first stop loss will be here for this one. Second stop loss will be here for this one, right? Then all of a sudden, price can move up and take out your your second stop loss, right? Because that entry you took was an inducement. Maybe it was not even up to a 50% pullback, right? It was an inducement, and market used that to take out liquidity for a continuation of the run, right? So you now need to understand which of the trade you are trading that's an inducement or which is a valid pullback. You understand? So that is what you would need to do to back test your move. For example, this move you have here, right? You can see market trading off this particular imbalance here. You can see market trading off this particular imbalance. Now, those who took trade off this place, they are taking of course you've entered a kind of a good trade, right? Those who took trade off this method would have entered for a good sell, right? But you can see market still pull back and what reacted off this point of interest. After taking out this liquidity, market made a move up, reacted off this point of interest before selling. So if you were scaling and you're not taking that profit, say you enter your first entry here, your second entry here, your third entry here, and this was now your fourth entry. Of course, your stop loss will just be above here. You understand? So entering with this kind of move, right, you should be very very careful because market can just use that move as inducement, right, and takes you out. So at this kind of move, you're entering at this kind of move, and especially if there's a strong demand below, you would need to take profit very quickly before market makes that pullback and you catch your second entry. Okay, you now catch the third entry or the fourth entry. So understand it very well and backtest it before you start doing it, right? This is not a newbie move, right? It's not a newbie move. Scaling is not for newbies. It's for people that know how to understand, that know price action very well and understand how price reacts, right? So it's not a new B move, but it's something that you can learn and it's gonna really really help your trading journey. So that'll be all for today, guys. Thank you for watching.